inputting your information. So this is where stuff gets fun. Again, you can't break this sheet, so don't get frustrated if you start entering things and it doesn't seem right and you need to change it. That's fine. Don't be afraid to, like I said, poke around and just start playing with it. So the top starts out real easy. What's the name of your company? We'll just call it Acme. What is the expected selling price of one unit of your product or service? Now, this sheet is assuming that you can do this, that you can assign your product or service units. If that does not work for your business model, there's going to be a video later that we kind of will help you get through and kind of get around that. For now, we're just going to assume that it works. So, we're selling widgets. What's the expected selling price of your widget? We'll just say, $25. How many do you think you're going to sell in year one? We'll say 5,000 of them. This question, what percentage of sales volume should be held in inventory? For now, go ahead and ignore that question. This was actually meant to be taken out, but there were some mathematical problems with that, with our formulas. Basically, that's just asking, it would be for production, like if you paid to make them and you didn't sell them. For now, just say there's going to be 0% left in inventory, you're selling everything, just for simplicity's sake. We don't need to get that complicated. What percentage of revenues do you expect to collect? I would say 100%. Again, this is going for like accounts receivable, accounts payable amounts at the end of the year. Don't worry about those. They're more complicated than the judges care about or need to see. If you really understand the numbers and you want to get in and fiddle with those, you can. But for now, just leave the inventory question at 0% and the sales revenues question at 100%. Also this one, what percentage of expenses do you expect to pay? Just say 100%. These are basically just, they make it easier and simpler. What will be the number of shares of common stock for each shareholder? So this question, we're going to assume right now that we're operating under a partnership. So we've got partner number 1, partner number 2, and if you don't have partners, this is going to be super easy because you'll only have one person and it'll be, 100. I feel like it'll be easiest to split this out by percentages. Again, if you understand common stock and you want to make this, 500 and 500, that's fine, or break it down by percentage, whatever works for you. Now, par value, don't actually enter like a valuation here. Reason being, the formula assumes that this is money. It assumes that this is money that you are putting in as partners. So if you say, the par value is $1,000, it's going to say that you've got $50,000 in cash. If you do, that's great. If not, just say that the par value is $1, and that way you can show what the ownership percentage is, but it's not messing with your cash calculation. So if you look over here, actually that's including sales numbers, but if you can look down here, it's flowing through to cash and to your common stock. So just keep the par value low unless you as an owner, or two of you as partners, 2 or 3 of you as partners, are actually contributing cash. So this is basically just your ownership percentage, and then par value should be 1. What amount of distributions are expected during year 1? Again, this is probably a more complicated question than you need, and honestly, in a real life situation, most companies don't have a positive net income in the first couple years, in which case there's no income to distribute. So the distribution probably is just going to be 0. If you show that you have a positive net income and you want to distribute some of that income, then go for it. But again, for simplicity's sake, you could just leave this as 0 because, again, most companies are not going to have a positive net income. And even if you did, you're not required to distribute that income to the partners. So this is basically just, it would flow through as a cash reduction. So just, you can ignore that and make it 0. So here's where your actual operating costs begin. So what materials are needed to produce 1 unit of product service? And, I don't know what those are, but say you need 2 different types of material to produce your widget, and you use 1 of each. It's made of 2 pieces, and the first piece costs you, $5 and the next piece costs you $7. So all told, your widget product costs you $12. What labor is needed to produce one unit? This is going to be tricky. Again, you can put something here. There's going to be more questions down here as far as salaries. This is basically just if you know it's going to take somebody, we'll just say, you're going to have to pay one employee for, 1 hour of, it's going to take one employee 1 hour at $8 an hour to make the product, and that's directly assignable to it. So you can put this here if you don't really have any sort of labor that you can really assign to each particular product. You can leave this blank, that's fine. And going forward, you can leave any of these blank. If something just doesn't seem to make sense to you and your business model, that's fine. Just leave it out. The judges do not need to see something in every single one of these columns. So this is where I was talking about payroll. Again, if you don't have something like an hourly rate that you can assign to each product, this is where you'll be entering your actual payroll to employees. So the first one is management positions. That's obviously going to be, president, C-suite, whatever they are. And, you'll have, say, one of each. Now, one thing to notice before you start entering salary here as say $50,000, it's asking for the monthly amount. So it's going to make it much higher than you intend if you put in a yearly salary. So it's looking for monthly salary for each position. So we'll say, 5, however you want to work those out. Just realize that it's asking for a monthly number. So that was management positions. These are other positions. So maybe you'll have a sales rep, an office admin. Now make sure you don't start adding payroll for employees that you're already accounting for up here. So say you know that you want to hire 2 more people, but you've already accounted for the cost of their labor up here because they're the ones actually making your units. Don't enter them down here because you're going to double it. So basically this is just people who aren't directly, related to the production of your widgets. And as we move down, we're going to see more of those expenses that might not be relevant to you. Employee benefit expenses, you might not have any. You can leave it blank. Sources of advertising, say you're going to do, Facebook marketing and, billboards. Again, I think this is, it's asking for a monthly cost. So make sure you're not putting yearly or weekly or whatever it is. You're entering what you think it's going to be every month. Utility costs, maybe utilities are included in my rent, so I don't pay anything, so I can just leave those blank. Professional fees, maybe I've got an accountant I'm working with or a lawyer, who maybe I pay a retainer to, who knows. Insurance expenses, and these are the kind of expenses where the judges do want to see that you know something about what these costs are going to be like. Nobody thinks of insurance expenses when they're writing a business plan. Legal fees they might think of, but probably not as high as they're actually going to be. This is where the judges want to see that you've done your research and that you understand that there are going to be costs that most people don't think of. So, general liability insurance maybe is another, $100 a month. Obviously that's going to depend heavily on your industry, but, office supplies, aren't too many of you, so it's real cheap. Repairs and maintenance, maybe you repair the machine that you're making your widgets on. Automobile expenses, maybe you never really have to drive anywhere to see clients or anything like that, so auto is blank. Miscellaneous, maybe you have some expenses that you should be accounting for that aren't on here, so you can enter that here. Rental, so you're renting a garage somewhere. Like I said, no utilities, but you're paying rent. So you've got a little bit of rent there. Property tax payments. If you don't own the property, you're probably not paying property tax. So you can leave that blank. What debt instruments will be issued during year one? This is where it's going to calculate a lot of different things for you. So it's calculating interest for you automatically, your payoffs automatically. So say we take out a small business loan for, $150,000. Oops. And you repay $350 of that per month. The interest rate on that is 3.5%. And again, what it's doing with these is flowing them through to your financial statements. So they're showing up on your profit and loss, your balance sheet, your operating expenses here. This is, again, where the judges want to see that you've taken all of those into account. And the loan is a little bit tricky. So if you have questions about those, make sure you bring them to the help sessions. What expenses related to year two do you expect to prepay? Again, this is kind of the same thing as what's going on up here with the what percentage do you expect to have paid. Just leave these blank unless you really understand what we're doing and you really kind of want to show that you've got some prepaid expenses. Otherwise, just leave all that blank. So this question is regarding capital assets or fixed assets. And those basically are big expensive things that you're going to use multiple years in a row. And the way that this spreadsheet works is that you need to enter 5 of them. So if you're a widget company, that's probably not that hard. You've got, a big widget machine. You've got a couple different computers for your staff. Oops. And you've got a really nice desk. Okay. So there's going to be 2 things. So obviously you're putting the cost. So say you've got it's a really big expensive machine that you're using to make these widgets. The computers are all pretty much the same thing. And the desk, it was, again, a really nice desk. Another thing you need to enter, though, is the life. And you're going to find that on the instruction sheet. So if you scroll down here, the IRS has different classifications for things, and it assigns how long it thinks you're going to use them, or their useful life. So the machinery is 5, the computers are 5 years, and the furniture it thinks you're going to keep for 7. So that's the useful life that the IRS has assigned to those different things. So you're going to come back to input year 1. The machine was 5, computers were all 5, and the desk was 7. And what that's going to, the desk was 7. Da-da-da. And what that's going to do is calculate your depreciation expense. So how depreciation works is that even though you've paid out all of this money in year 1, the IRS isn't going to let you expense all of that money in year 1 because you're going to be using those for a number of years to follow. So you only get to take a portion of that expense, and then the rest of it you get to take later. That's how that works. And this last question, again, what will be spent on land? Unless you're actually buying land, this is probably going to be nothing, so you can just leave it alone. And the biggest thing to keep in mind as you're filling these out is that it just needs to be consistent. So if you're saying that you don't have rent, okay, so say you leave rent blank because you're going to be operating out of your basement, that's fine. Just make sure that somewhere else in your business plan, your executive summary, somewhere in your operating documents, you are consistent and mention that you're going to be operating out of your basement. It just all needs to be consistent. It needs to be consistent and it needs to be accurate. Don't just make stuff up. Most of these judges have had businesses of their own. They understand when numbers are going to be all sorts of wacky. So as you put them together, you can kind of look at the financials. We're going to take a better look at those in the following video and just fill out year 1 and year 2 the best that you can. But again, be consistent with the rest of your business plan deliverables. Next video, we're going to talk about how to look at the financials. So click through and follow that one.